They said Bitcoin would make you rich. They promised you'd escape the banks, escape the government, escape that system. You know, the one that prints your money and forces the poor into inflation while making the rich wealthier. But you know, throughout history, slavery has never been easy. Because when you remove the rules, fire the referees, get rid of the regulators, what's left? Paradise? Number. War disguised as opportunity. If you want to learn Bitcoin, you have to go back to 2008. That year, everyone's trust was broken. The financial crisis exposed what it really was, the headquarters of deception, leverage, lies, fraud, all of it. When Lehman Brothers collapsed, everyone realized those in power don't have control, and they're not taking responsibility either. Central banks printed trillions to bail out the very institutions that caused the disaster, while normal people lost their homes, their jobs, their money. Everyone figured it out at the same time. This system is built on faith, not competence. Right then, in a tech forum, someone named Satoshi Nakamoto posted a 9-page document. The title, Bitcoin, a peer-to-peer electronic cash system. In 2009, the first block was mined. Satoshi left a message inside. The Times, 3rd of January 2009, Chancellor on brink of second bailout for banks. Not just a timestamp, a middle finger to the system. But what does mining mean? In Bitcoin's world, you're not digging. You're solving hard math problems. When a computer solves one, new transactions get added to the block and you earn Bitcoin. That's how the network stays alive. Thousands of computers competing with each other, verifying, securing everything. No one's in charge. No government or bank, just math. Believers gathered. Libertarians, programmers, people, anyone who said money should be free from the state's hands. They traded on small forums, sending coins to each other. Someone did this, gave 10,000 Bitcoin, got 2 hamburgers. In today's money, that's $600 million, the most expensive hamburger in history. Then a problem started. Human nature collided with Bitcoin's idealist promise. By 2013, the price jumped from $1 to $1,000. Speculators came rushing. Mt. Gox, an exchange, suddenly became worth billions. And then what happened? Collapse. In 2014, Mt. Gox disappeared. 850,000 Bitcoin gone. $450 million. You can't get money from anyone, no one's responsible, there's no mention of refunds. The blockchain recorded all the money, but couldn't recover any of it. The technology was perfect. People failed. This is Bitcoin's contradiction. You remove the middleman, but also remove the middleman's protection. Something goes wrong? Who do you complain to? You can't complain to anyone. Every transaction is final. Every mistake is infinite. As the crypto world grew, so did the fraud. Fake wallets, cheap tokens, all using Bitcoin's name but much worse. In 2022 alone, the crypto industry suffered $3.8 billion in theft in a single year. Whether you believe it or not, the blockchain shows all the thefts, but can't get the money back. The addresses aren't hidden, but the owners are. There's something called cold storage, devices like Ledger or Trezor. Safer, yes, but not perfect. It protects you from hacks, but not from fraud. If you willingly send coins to a scammer, that device can't save you. This is Bitcoin's forced choice, freedom or security. You can't have both. Bitcoin removed centralized control. True. But it also removed the safety net that ordinary investors depend on. No refunds, no customer service, no exit door. But people kept believing. Because Bitcoin wasn't just money, it was ideology, a provocation against the old system. In 2021, one country decided Bitcoin will become real money. El Salvador, an economy that works with dollars, leaving millions behind. Young President Nayib Bukele said, "This is revolution." For the first time, a nation would use stateless money. At first, it looked great. The government created an app called Chivo, gave out $30 in Bitcoin to everyone who downloaded it, installed Bitcoin ATMs across cities. A Bitcoin beach appeared. Tech influencers called Bukele the CEO president. It felt like a new era was beginning. Then reality hit hard. Salvadorans didn't want a volatile asset for groceries. They wanted stability. In 2022, Bitcoin dropped 60%. The government's holdings lost half their value on paper. Protests erupted. People complained, "The app crashes, there are scams, my money is frozen." The IMF warned, "This could seriously damage the country." We get to 2025. El Salvador holds 6,240 Bitcoin, worth around $740 million on average. The government displays this proudly, but the reality is more complicated. Only 8% of Salvadorans use Bitcoin. The rest stick with dollars. An IMF deal was made. Bitcoin acceptance became voluntary, no longer mandatory. The government quietly buys some Bitcoin, but no one talks about it. In 2025, we noticed something important. Bitcoin's code is pure, but its market isn't. There are whales, people who buy and hold the most Bitcoin. To be specific, 1% of all Bitcoin holds more than half of the total supply. Many people or companies controlling the price of what everyone calls decentralized. If one whale moves 10,000 Bitcoin, $600 million, it can sink entire markets. In traditional markets, this triggers alarms. Institutions like the SEC and FCA watch insider trading. If an executive buys stock before news comes out, they go to prison. But in Bitcoin, there are no rules, no disclosure, no penalties. If a whale sells to trigger panic on one exchange, then buys cheaper on another exchange, it's called strategy. Even more common, exchange employees know which coins will be listed next, trade before it happens, make profit. In regulated markets, this is a crime. In Bitcoin, it's just today. This is the real contradiction in Bitcoin's story. It was built to eliminate corruption, but people built everything around it. People learned to break the rules because there are no rules. Bitcoin can't be manipulated by governments, true, but by people, well, that works fine. This isn't decentralization. It's just a new power center with better technology. We fear insider trading on the stock market because it's unfair. On Bitcoin, we call it early adoption advantage. The result is the same. Power concentrates, latecomers pay the price. In 2025, Bitcoin is both legend and suspect, a legend of digital freedom and another form of human greed. Its price keeps rising. Politicians tweet laser eyes. The old song starts again. This time is different. Number. History doesn't change. It just hides itself again. In traditional finance, there are managers, courts, deposit insurance. If your bank fails, the government steps in. If an executive commits insider trading, they go to prison. If someone steals your money, there's at least a chance of recovery. In Bitcoin, none of that exists. The blockchain records truth, not fairness. Perfect visibility, zero accountability. You can see stolen money, trace it to the scammer's wallet, follow it through mixing services and exchanges, but you can't get it back. The ledger is honest, but people aren't. That's what makes Bitcoin so interesting. The technology isn't broken. Human nature doesn't work with code. The line between Bitcoin and the rest of the crypto market has never been clearer. Bitcoin is the most decentralized, most secure network, but it's surrounded by projects that mimic its language but don't carry its integrity. Bitcoin rose. Thousands of new coins appeared, all promising faster transactions, new blockchains, decentralized finance, metaverse, NFTs. When it didn't work, Bitcoin got damaged because people see them all the same: fraud, hype, volatility mess. But they're not the same. The crypto sector turned it into a casino around it. And casinos work like this. The house always wins. The problem isn't just fraud or greed. It's the system itself, or rather, the lack of a system. In 2025, global regulators can't figure out how to handle digital assets. Some countries ban them, some tax them, some ignore them. There's no international standard for exchange transparency or consumer safety. This is what makes Bitcoin such a fascinating system. It removed the gatekeepers, but not the power. It changed form. Instead of central banks, central holders. Instead of policymakers, influencers. Instead of oversight, algorithms. Still hierarchy, just packaged and sold as decentralization. The truth is, Bitcoin did something incredible. It proved money could exist without a state. It showed trust could be built on math, not institutions. But every rebellion faces the same test. What happens after you win? Freedom without structure turns to chaos. Chaos eventually demands new rulers. Bitcoin outlasted its critics, its crashes, its imitators. But its greatest war isn't technological, it's moral. Can money survive without laws? Can a global market function without accountability? Can freedom continue when everyone's interest is self-interest? The answer is still being decided. Bitcoin fulfilled its promise to create money beyond the state, but in doing so, it revealed a deeper truth. When you remove the rulers, the powerful don't disappear. They just change wallets. If this gave you a new perspective, subscribe to my channel. History has many answers. I'll show you where to start.